Ladies and gentlemen, welcome back to AIC TV. I'm Edward Carr, your host, in collaboration with Dukascopy TV. And today we're really fortunate to have with us in the studio Clive Skane-Davis. Clive is Vice President of Globaleye, based here in Geneva. He is in charge of their Swiss operations. He is a consummate financial professional, has over 30 years experience in the financial services industry. Clive, welcome to the show.
Thank you. Great to be here.
Oh, nice to have you. So, Clive, we look out at the current investment landscape today, and especially with U.S. citizens. A lot of banks, a lot of financial institutions are really getting rid of their U.S. citizens, their U.S. clients. We know FATCA is coming up. What's the current state of the industry?
FATCA, I think, has done a lot of good in many ways. It's concerned some people, and what it has meant for many is that they have been turned away from some institutions, those that aren't willing to comply. On the other hand, of course, many have decided they will comply, and there are plenty of banks, as you know, that are able and wanting to take on new US citizens as clients. Equally, in the investment arena, over the last couple of years, there have been some tremendous steps forward and some very new and exciting areas that US citizens specifically can take advantage of.
Okay, so U.S. citizens and especially overseas American citizens should not feel isolated.
Absolutely not, no. There are plenty of opportunities out there, as I say, both in the banking side, with private banks taking them on, and also from an investment side, lots of scope, plenty of tax beneficial areas that they can look to invest.
Okay, so how does Globaleye specifically help U.S. citizens? What sort of solutions can you offer?
Okay, well, Globaleye are a firm of independent and international wealth managers and financial advisors. So our marketplace is very much the international professionals anyway. Very specifically with US citizens, we have the availability within Europe to set up an international pension arrangement for a US citizen that is going to help protect any existing assets that they have, assets such as cash in the bank, an existing portfolio of shares, equities, etc., that they can move into their international pension, ensure then that they benefit from some tax breaks. Specifically, gross roll-up of that money inside the pension scheme, which is what you would normally expect. But also, when they decide that they want to take those benefits, whether they're in Europe or whether they have returned to the US, they can take quite considerable amounts of the fund tax-free, and also then an income, which will of course be on a tax basis, from that long term.
So this sounds really exciting. So these benefits actually would even apply to U.S. citizens who are overseas who plan on returning to the United States?
Yes, absolutely. Edward, what they have done is they have taken advantage of a double taxation agreement, which very clearly states within its rules that not only what a pension is, but there are two aspects to it that are important to us. First is that you have levels of tax-free cash that can be taken. The second is there is permitted gross roll-up. It's fully US compliant and qualified, and they can take that asset, that international pension, back to the US with them when they return and continue to take the same level of benefits. Importantly, without affecting any US pensions that they have.
Interesting. Oh, it all sounds really nice and really good to our listeners, but how about regulation or authorizations? What exactly governs these sort of schemes?
Yes, okay. The setup of this is an international pension. So it's formed as a pensions trust and is fully US compliant and gives the afforded tax breaks that I have mentioned. Absolutely everything is reported, both by the individual, so they will go through their normal returns of FBAR and of course any foreign income accounting. That will all be done as normal. The trust, of course, will also then provide the information and certificates that are required from their side to make sure that although you have disclosed the fact that you have got growth, and normally therefore would be taxable, that it is not, because it falls within the pension, and they'll have the full certificate. So everything is fully reported, everything is fully FATCA compliant, and on an ongoing basis, that is the only way to run this sort of thing for any US citizen, as we know.
Sure. Sounds like you've really done a lot of research. I imagine even consulted with legal teams on it.
Yes, actually, Withers have supplied us with full counsel's opinion on this, which is extremely positive. I've had discussions with them locally here as well, and a number of their sort of US tax advisors here, and they have basically turned around and said, yeah, it's great, it works. It's, you know, it's very well laid out, and it's not a case of even being complicated. It's very straightforward, double taxation agreement that specifies what a pension is and gives you the benefits from that. So yeah, very clear.
Great. And then how about in the future when someone actually wants to start withdrawing from their international pension and taking the benefits? Are there any issues there? No issues, and in fact some tremendous benefits. First of all, the benefits can be taken from age 50 to age 70. So you have to start taking the benefits between those ages, which from a retirement point of view for most people is not a problem. First off, you can take 30% of the fund as tax-free cash. At that point, the fund is also valued in order to give you an ongoing income, and obviously that's based on your age, mortality figures at the time. So that will then give you an ongoing income for the rest of your life. That's the annuity element of it, or the ongoing income element, depending on which you choose. Having said that, 3 years later, the next opportunity comes up, because you're able to then revalue the fund, and if there is an excess of money on top of what is needed just to provide that base income, you can take 50% of that. And then 1 year later, you can do the same again, etc., ongoing. Right. So that will mean that you can take a considerable amount of the fund, especially if it's a large fund, as tax-free cash, and then still just have that income on an ongoing basis. Hugely tax beneficial. Sounds great.
Yeah.
Yep. Do you have any specific examples as to what this would be appropriate for?
Yes, there are a few that have come up, and of course this facility overall has been available now since 2011, so there's also 2 full years of compliant IRS reporting history and experience, if you like, on these. But some that have come up would be the normal, unexpected, where individuals just want to protect existing portfolios, existing money in the bank, and put it into a pension and roll that forward on a tax efficient basis. That one's fairly straightforward. Another actually came up in discussion with one of the tax guys at Withers, where the aim there was to take the existing first and second pillar monies that are here at the moment, and when a US citizen leaves and wants to take those monies with them, they can actually take that money and put it into this international pension arrangement and keep it more tax efficient as well. We also have an example of a guy that runs a hedge fund, considerable amount of money in his own fund, and of course paying accordingly on the gains, etc. on that, but was able to take a large part of that and say, well, I want that in my pension, so move that fund in specie into the pension for his future benefit. Okay.
And in Geneva, and especially Switzerland, we have a lot of American multinational companies. They tend to compensate their employees a lot through stock and options. Is that something that could potentially have some benefits here?
Yes, absolutely. Really good question, because there's another perfect example here, and that is that those individuals that have those shares quite often are a little reluctant, shall we say, to encash them and diversify their portfolio, so they're very heavy in their own company stock, because of course if they're pregnant with gains, then they know that they've got a big bill coming their way. But actually, again, an in-specie transfer of those shares into this arrangement will not give rise to that capital gains payment, so a real saving.
Super.
Real bonus.
Sounds great. Clive, how do people get more information? I mean, if they'd like to find out more, do you have a website they could go to?
Yes, we do have a website. The main website, of course, is globaleye.com. I'm based here in the World Trade Center. Of course, they can contact me. My details, my bio, etc. are on the website, along with my telephone numbers. And we will be also presenting through the AIC some seminars, which is purely for information purposes, in the near future. So they'll be able to come along and see those as well.
Sounds great. Clive, really appreciate you coming by the studio and sharing some thoughts with us
Fantastic.
today.
Thank you very much.
Okay, ladies and gentlemen, I'm Edward Carr, your host, in conjunction with Dukascopy TV. As you heard, there still are investment solutions available for U.S. citizens out there. We're going to be having a couple of educational seminars coming up in the future. Come to the seminars, educate yourself, learn more. Feel free to get in touch with us anytime if you have any questions, and we look forward to seeing you in the future on other upcoming interviews.